We're going over pending orders, aka stops and limits. So let's go to my favorite exchange, gold. Let's take away all the indicators. All right, so there's essentially, let me think, 5 types of orders that you can set when it comes to trading in the market. Yeah. So you have market execution, which is enter at exact price point in market as that of when you push the trade button. It's a bit smaller. All right. Then you have a buy stop. Enter once market pushes in the upward direction in a buying momentum. Buy limit is going to be entering into a buy once the market goes down to a certain point and hoping to enter the buys in the reversal of this market. So then you have your sell stop, which is enter once the market pushes downward in a seller's momentum, and a sell limit. Entering into a sell once the market goes up to a certain point and hoping to enter sells in the reversal of the market. So these are the 5 different kind of orders that you can put in whenever you're trading, whether it be TradingView, MT4, whatever you're trading, exchange you're trading from. If you're using Ugo's Way, direct to MetaTrader, anything you're using to trade, these are your 5 different types of entries that you can go in. So we'll review each one in order, starting with a market execution. So market execution right now, just, off the plain naked chart, no really markup or nothing. Looks like we've got a double top right here with a confirmed evening star that's looking to go towards that bottom entry. So here we're going to be able to cover market executions and sell stops. So market execution, let's say we are looking for the overall sell, would be you just entering into this price point exactly where the market is at. So 1818.071. Oh, sorry, 1817.93. So let's say, I know the markets are closed right now, so this is a little bit more difficult, but let's say the market's open and we're pushing at the 1817.93. Our stop loss will always be above that last previous high, so we'll go 1832. And then take profit somewhere in this area at 17, we'll say 70. So that's what a market execution would look like, because you spot the trade and you try to enter the market at the exact price point. Good so far? All right. Don't see anything in the chat. Yeah, I was just checking the chat. All right, so I'm gonna keep on moving. After that, we're going to cover a sell stop. So what we do know about this evening star formation is that there's a significant way to trade it. And you usually enter the market under the lowest point of the 3 candle formation, which would be under this wick. So we'll go at about 1812, we'll say. Same thing with our stop loss, just double check that, 1832. And then take profit 1770. All right, so I'm gonna keep pushing. All right, so this would be a sell stop. As we see here, enter once the market pushes downward in a seller's momentum. So right here, this is something you could set up when the market opens at 5 p.m. Sunday. Instead of entering that market execution point up here, you're giving yourself basically a little bit of breathing room to go towards the downside of the market. And you're waiting for the market to stop here at the 1812 area. Once we hit this point, you will then enter the sell to the downside. So that's going to be your sell stop. And then just to stay with sells, and then we'll wrap up with buys, we'll go over a sell limit. All right, so just mapping out the market a little bit. So we may see something like this, and then the continuation. Well, before, let's say Sunday market opens and we push down here to like right around this area, and you don't really want to get in the sell because it's too much of a risk factor to put your stop loss up here. What you can do, if the market is already trading in this area right here, throw out my highlighter real quick. So let's say this candle goes this way. What you can do is you can set up a sell limit position to the top of this area. And this is what Kelvin had sent out the other day. So we'll go throw a fib on there real quick, just so we can get a more of a realistic entry and you can see it. $1782.675. Got the high at 1831.835. So let's say we want to enter a sell limit at the 786 area. We'll say 1821.3. We can use the same fib, stop loss. Take profit at 1752. And then stop loss right above this at 1832. So in a sell limit, oh, what just happened? I just lost my chart. All right, there we go. In a sell limit, we're waiting for the market to make its move down, make a push back up, and once we hit this spot right here, we will be entered into a sell. So it says entering into a sell once the market goes up to a certain point and hoping to enter sells in the reversal of the market. So even though the market is rising, we're basically anticipating that retest and trying to get in on that retest. And I can pull up the trade that Kelvin actually sent so you can see it a little bit better, and maybe it'll make a little bit more sense as to what he meant when entering sell limits. Is this it? Nope. Check the public. All right, here we go. NAS 100 sell limit. As you can see, he was anticipating the drop here in this buy candle. He was waiting for the retest of that proven area of resistance, stop loss right above the previous high, and then take profit in the previous areas of interest. So he was waiting for the market to bring that push back up. Although it didn't, it kept dropping. But this is just more of a, per se, secure entry. Helps you tighten up your stop loss a little bit. Also less risk adverse, versus getting into market and then having it retrace potentially back up into this area and then your stop loss being up here. That's what a sell limit looks like. All right, now let's look into buy stops and buy limits, which is essentially the same, just on the opposite end of the spectrum, but just so you can get a visual of what those look like. So buy stops. All right, let's say that we're using this area as a potential area of interest. And now we get a buy candle that prints in that direction. But we want to make sure that we clear this previous area of resistance. So what we can do is we can set up a buy starting at that area, 1832.5. Stop loss, last lowest area is a little bit risky, but we'll just put it below here, 1810, we'll say. and then take profit, last area of interest, about 1865, 1870. So as we can see, buy, stop, enter once market pushes in the upward direction in a buying momentum. So we're waiting for the sellers to get pushed out of this momentum for the market to push upwards. And once we're in the market, once the market crosses that 1832.5 area, we're looking for it to continue here and into that buy on the opposing end. All right, and then buy limits. It's more of a reversal entry. So let's say we're looking at this area. And in this general area, or maybe actually like this one better, supports the trend a bit better. We're looking this area as a strong area of support that continues to go away every time we hit this area. The first time was about 1,000 pips. And then the second time we go for as high as 600 pips. So if we're looking for the market to drop a little bit, let's say this opens Sunday with a crazy sell opening, and we have reason to believe that this area of the market, you know, the sell is done. We're looking for a reversal, looking for something that might go a little bit like this. Well, we can set a buy limit when we hit that area of interest. Say 1768. Use the low of this wick as their stop loss, 1752. And then our last tested area at 1867 as take profit. So once the market heads down in this direction, we're looking to take the buy here. And taking it up to here. But as the buy limit says, entering into a buy once the market goes down to a certain point and hoping to enter buys in the reversal of the market. So instead of buying here and risking that drawdown, having our stop loss down here, potentially even get hit, we're waiting for it to make that full trend continuation and then taking it back up. All right, so that's pretty much the basics of buy stops, buy limits, different kind of entries. And then this part might be a little tougher because I don't have MT4 on my laptop, but I can show you through the phone how it would look like to do one of those trades. So we'll go to gold. If you can follow along with me in your phone. So we'll go to chart. Oh, sorry. Trade, quotes, find XAA USD. Can you see my camera? All right. There we go. Now I can see my phone better. All right. XAA USD, hit trade. Then at the very top here, right under the pair, you see where it says market execution? That's obviously the, you know, whatever entry we're entering at 1817.88. That's the first one I showed you. Well, now if you want to change them, you click on that market execution and now you can see buy limit, sell limit, buy stop, sell stop. So if we would go to enter the trade that Kelvin sent, we'd go to quotes. If I can find Nas up here. All right, quotes. Click on NAS 100, trade. And then let me pull up that trade. All right, sell limit. So we'd hit where it says market execution, sell limit, and then you enter your parameters. Price, 15,895. Stop loss, 16,001. Take profit. We'll do TP1, 15595. And then at the bottom, let's say you saw the trade go out before you were going to work, and maybe you want to set expiration date on it after you got off work. Maybe if you weren't in by that point, you wanted to reanalyze the market. So you can actually set an expiration time on it today at midnight. Or we can do Sunday, January 16th. We'll say at 9 p.m. after the first 4-hour candle. And it won't let us place a trade right now. But that way, when you do these sell limits, or sell limits, sell stops, and buy limits, maybe if you're not around your computer, or sometimes we'll even when I send out a trade, I'll say, hey, if we don't reach this by the next 4-hour candle, I may consider reanalyzing. Maybe you're going out for the night, you might be busy before I send out the update. You can set that expiration time at 9 p.m., 1 a.m., whatever the 4-hour candle it is that we're looking for. But essentially all you're doing is the same way as taking any trade. You're just copying and pasting. You just got to make sure you click the right type of entry. And when you go to enter the parameters, you'll kind of be able to tell if you're clicking on the right one, because per se, right now we're looking at a sell limit. If NAS is higher than 15,895, it won't let you place a sell limit at that price because it's higher than that, and it's not going to rise to that before it starts selling. It'll drop to that. It'll have to be a sell stop. So as far as basics, I mean, that's pretty much the basics as far as how to enter these trades into your MT4, and the difference between what kind of entries you can take, specifically when you're looking for your own trades or when we're sending out any trades. Other than that, was there any questions? Anything I could help you with that semi-explain it? Did you want me to go back over something? How much money do you need to trade NAS 100 or US 30? Be frank, there's not really a minimum. There's recommended amounts. So I wouldn't get into any US 30 trade with, if you want to be on the risky side, you can get into it with, $150 in your account, depending on what the stop loss is. I don't trade it as much. So, Kelvin may have a little bit better advice as to what to go into a US 30 trade with. But as far as just general advice, I'd like to say at 150, you should probably stick to NAS 100. And then once you get your account to about $500, you can start playing with US 30, because a lot of those moves when Kelvin is trading them, and most traders in specific, you have to allow a lot of breathing room for stop loss. So you're looking at $100 stop loss and sometimes $150 stop losses, depending on the move. And if you only have $150 account, you take $100 loss, you just lost 2/3 of your account in one trade, and that's bad trading right there. So 400, you could probably get into a solid US 30 trade with a $100 stop loss or less. NAS 100 at about $100 you can trade, because they both pay out for every price they move. So like if US 30 goes from 30,000 to 29,000, that's $1,000 sell. Same with NAS. The only difference is NAS doesn't move as much. So like you see what would be a $6 stop loss here on NAS, on US 30 would be $60 stop loss. And a lot of the times we'll trade NAS, SPX, and US 30 in unison, because one of those is usually the big pumpers and the other two markets usually follow. So, you know, let's say the US 30 stop loss is $200. That's half of your account. You don't want to risk it. But we have the same similar setup on NAS or SPX, and those stop losses is only 20 bucks. You can take that trade and feel a little bit better about risking it in your account. But with 400, I'd feel comfortable trading all three of those indices inside of your account. I would just be careful as far as to the stop loss. And just always obviously make sure you're doing your risk to reward analysis. So like the trade that we have here in front of us, 60 pip stop loss to a minimum 300 pip trade, that's 1 to 5 risk. That's a great risk. Remember, we always try to strive for at least 3 to 1, at least 3 to 1. And then TP2 is a 1 to 10 risk to reward ratio. So you're risking 60 bucks to gain 600. That's a pretty good payoff. And as long as you win 33% of your trades on a 1 to 3 risk to reward analysis, you can be profitable. Obviously, we're not teaching you to strive for 33%, and that's not the end goal here. But you do have to keep that in mind. Like, as long as you're doing the proper risk to reward analysis and you're winning 1/3 of your trade, you can continue to be profitable for the rest of your life. That's the bare minimum that you have to do, and it's not that hard. Just don't get into bad trades. Anything else? No problem, Toby. I know it's been a little crazy, but so Sunday I should personally be back trading again. So you should get an Outlook video either Sunday or Monday. Tuesday we'll have our first live stream trading, back to our first live team trading call, probably around this time, anywhere between 7 to 9, depending on when I get off work. And then we're rebranding everything. We've got some new educators coming in. So look forward to hearing from a few more people when we do these calls as well. And as always, you know, anything I can be of service to you, I'm at your disposal, brother. Just shoot me a message on Telegram or my phone number if you have it, whatever you're more comfortable with. And if that's it, then I appreciate your time and I hope you have a great weekend, bro.
Oh yeah, bro. Appreciate you. Sorry, I was around some family,
No,
so
I
it's a little
figured.
loud.
No, you're good. I heard when you came in, but I appreciate you being attentive and, you know, taking it all in and soaking the information and making the time, because a lot of people would have canceled at that point. You know, most people would have
Yeah,
been like,
nah.
"We'll talk later."
I've been, you feel me, keeping my head in there. You feel me, I've been jumping in and out with y'all, but I still been, you feel me, working on my skills. I just haven't messed around with the US 30 and NAS 100 at all because, you know, when when I would have smaller accounts, it would say it not enough money in MT4, so I just wouldn't even mess with it unless
It
I.
also depends on your broker. So like depending on your broker, Ugo's is usually more lenient, but if you're using like LMFX, certain brokers require you to have a certain amount. So like LMFX will require you to have $1,000 in your account before you can trade US 30. And then sometimes it may be the stop loss. If you had a $100 account and you're trying to put in a $110 stop loss, it's not gonna make you make the trade because you don't have the leverage to cover it.
Oh, right. Okay. All right, man. Well, I appreciate you, bro. You feel me? Like I said, I'm gonna keep with it. Just, you feel me, keep working with y'all. You feel me, I appreciate y'all always,
All right, bro. Well, no problem.
always welcoming me.
We appreciate you being faithful, man. And we'll see you probably Monday or Tuesday.
All right, say less.
All right. Peace out.